Good morning, guys. Getting ready to take some trades here, and I kind of wanted to do it differently and really break things down on what I'm doing as I'm doing them. A lot of you guys have seen the coaching sessions that I've been doing where, we get on the one-on-one, we're doing the personalized coaching, setting everything up, making sure you're using the system correctly. And one of the main things that I'm looking at and looking for when I'm doing those one-on-ones and what I'm teaching people to look for is what you call a low risk setup. And a lot of people have kind of thrown that word around. Like everyone says, oh, yeah, this is a low risk setup and that's a low risk setup. But if you actually ask them what is a low risk setup, they don't really know what they're talking about. They don't really know what a low risk setup actually is. And that's because most people, they'll say something like this is a low risk setup because they've got this little tiny stop loss and this huge like profit potential. And there's something you've got to realize is that this profit is not always guaranteed, but this stop loss is. And so just because you have a lot of profit potential and a small stop loss doesn't mean it's a low risk setup. A low risk setup is exactly what it sounds like. It means that it's low risk. And so a lot of people, when they're looking at the charts, they're scanning around and they're looking for the biggest winner. They're looking for the most profit potential, something that's going to make them the most money. And that's not how you should be trading. When I'm scanning the charts and I'm clicking these buttons and I'm looking at these signals, I'm trying to identify the smallest potential losing trade that I can take, right? Something that I can actually minimize my loss on. My take profit is based on probability. Okay, so I like to use the ATR in my take profit. It's actual data. It's not just a support or a resistance area. It's based on how the market is performing. So when I'm placing my stop loss or I'm placing my take profit, I'm taking all of that stuff into effect. And one of the main things that I'm looking for and how I keep my losses small and my winners are larger is I'm looking for a trade where I know that I'll be able to reduce the risk on. Okay, and it's not hard to do once you learn how to do it. All right, so a lot of these they're just starting to move right now. It's about 7:30 where I live, which is 9:30 Eastern Standard Time. So the market's just getting, some volume coming in here. We've got indices moving. We'll start to see these things start moving. So I'm gonna mute and just kind of scan around for a second. I'm waiting for this candle to close, which it'll do so in a second. And you know what? Actually, I don't even need to speed it up. So just give it a second here. I've got this on live mode so I can see exactly what's moving and when it starts to move. And I've actually been watching this one since right here, but I didn't want to take the trade and because there was no chance to reduce the risk. So now we've got new candles. I can scan around. No reduced risk here. This is 2.6 was ATR. I could reduce the risk using ATR on there, but I think we could find a better option. And what I'm looking at is I'm looking at these numbers here. So I know that all pairs that begin in CAD are buying. All pairs that begin in NZD and AUD are buying. And then all pairs that end in CHF and USD are buying. So like we could look at AUD USD. Right. That one's not too bad. This is about 7 pips. We've got NZD USD. And then we've got these CAD pairs here. Just got fresh signals. So what I'll do is I'm going to wait for about 3 minutes or so, 2 minutes, 2.5 minutes, and then see how some of these candles, because these candles that are currently developing, those are going to let me know based on actual price action if I'll be able to reduce risk on a trade. Okay, so right now they're all just moving in the same direction, so I don't have any actual price action. This one I do, but we'll have to wait a little while. So if this candle kind of stays in this area here, even if it pulls back like this, as long as it's kind of in this area here, between where it is now and here, then I could go ahead and take a trade on that. I know that I'd be able to reduce my risk, and I'd be able to reduce my risk in two ways, and that this could be a good trade. So GBP AUD, and then what we'd be doing is providing it stays in this area, we'd be looking for it to go down to that 1.886 area, which is right here. So we'll give it a couple minutes. I'll come right back. All right, guys. So the trade idea that I had for GBP AUD, that one took off without me. So now what I've done is I've calculated my risk here. One second. 20. I'll be fine with hitting this TP right there. And this one has given me a chance to decrease risk. So ATR is 12 pips. My stop loss for this trigger candle here is 20 pips, right? Now we've got our CAD pairs that are in a bearish area, and we've got our GBP pairs that are in a bearish area here. There are some better opportunities, like again, GBP AUD, like I said, is if it would have closed in this area, I could have taken that trade, and I expect that it would have gone right down to here based on the readings. But it moved on without us. It's already hit that 186 area, or that 1886 area. So can't take that one. And I looked at the other pairs that we had signals on, and I didn't see anything else where I could immediately reduce the risk. So this one here, I'm going to give this one a little bit more room because this is the first trade of the day, but realistically, I can move my stop loss all the way down to here. So if you see how my risk just changed, it went from something that looked like this, right? And I told you I was going to take TP right here. The reason why I said I'm fine with not hitting that full, what appears to be a 1-to-1, is because I know that I'll be pulling my stop loss down. So really, my risk looks like this. My reward looks like that. And if you guys have watched me for long enough, you'll see that I do this on every single one of my trades. So dynamically, I have a good risk to reward. And what I'm going to do, like I said, is I'm going to give it a little bit more room. So I'm actually pulling this up. I'm going to pull it up right there. Is about 40% of my calculated position. So now I've got, again, risk reward looks like this, and I got this idea based on this sell signal right here that came from the system. Okay, so I'm using the system to find the trade. That part's easy. Okay, so everything's right here. I mean, you've seen me. I just clicked on it because it told me, hey, there's a selling opportunity. These little signals here, what this indicates is momentum. Okay, so if this is momentum, I know what the ATR is. I know around about where price should be going next. That's why a lot of times when you guys see me take these trades, they just go straight towards that TP. I don't need to know what happened over here. I don't need to know what's over there to the left. Everything that's on my screen is what I need, right? I could zoom in, you know, I'm zoomed all the way in. If I could zoom in closer, I would, right? And so then this system here, I mean, this is, once you understand this, this is so powerful because of how it works. I mean, this is a lot of you guys that haven't used it, or and some of you guys that are using it, you think that this is a currency strength indicator, and it is not a currency strength indicator. It does identify strengths and weaknesses, but that's not the reason why I built it. This is telling you all euro pairs on average are going down. All GBP pairs on average are going down. This is looking at every pair that begins in GBP, right? And if all GBP pairs, as an example, we've got, you know, GBP USD, GBP JPY, GBP this, GBP that, and every single one of these pairs has their own individual number, and then I'm averaging those numbers together to create an average direction number here. So if we've got a low number like this, then we've got a pretty good chance that all pairs that begin in GBP are selling, but we wouldn't just want to sell any um, or all GBP pairs. We want to find the best pair to quote against it. And so that's why you have a quote side. And then you can go and look and see, oh, look, all pairs that end in CAD are also moving down, right? So now we know for sure, or, I told you I want to trade GBP AUD, and look at that number, right? It's dropping down. But I skipped that one because it didn't give me a chance to reduce my risk. But look at that thing. I mean, we were sitting here talking about this all the way up here. That was 30 pips ago. This thing's moved down, now another 20, almost 20 pips. And, I don't know where it's going to go, but what I do know is the price is going down. And if we would have had a chance to reduce the risk, I would have taken this one, but this is just as fine because the thing is I had a chance to reduce my risk on this. Okay, so since I had a chance to reduce my risk, it's a good trading opportunity. If I do this on every single one of my trades, it's the same thing as you guys going like this and saying you need a high risk reward, but that's because you guys are focused on profit, right? And you're expecting profit to offset your losses, which I understand your profits should offset your losses, but you don't need to expect the market to go further when instead you can control your risk and you can create this exact same thing. So that's that. Let's see what this little pullback does for us here. Yeah, stopped us out. So that's okay because see, I wonder which one was GBP. They both moved up at the same time. So see, it's okay because I've lost a small amount. Right now, I can go in and I can start looking for another trade. Let's see that GBP AUD. Yep. So their GBP must just gotten some strength, so we can start looking again. See, here's another. This one I'm not going to take because it's a lot further down, but this looks like reduced risk to me. Candle will be closing here in just a couple minutes. See, AUD USD is flying. And we got a couple signals here. Oh, this could even be a good one. 9 pips. This could definitely be a good one. GBP CHF. If this closes right in this area, I might just go right in on this. I know it's another GBP pair, but we'd be looking for 10 pips, put us right back down into this area. I'd be able to reduce my risk very quickly. And so right now that puts us at 0.16 for the day. Give this 2.5 more minutes. I'm just putting a stop in here in case price decides to drop out. We're so close on timing that if it was to drop down and trigger this, then I'd want to go ahead and get on in there. Stops are going to go up above here at first. I'm just adding something here. If you want to follow along with what I'm doing here, you could rewind the video. I'm just setting something up on this platform. This lets me determine how much of my calculated risk. Let's see. There we are. So we're in there, and let me just make sure we got triggered. Yep. And so if I entered here, and I put my stop right here, then I've, instead of, so this is my calculated percentage, right? Or this is my calculated risk. So I calculated 15 pips at a 0.5%, right? So this would be what you would call 100% of my calculated position. All right, now my stop loss I've moved down to 50%. So now I'm at 50% of my calculated position. Whoa, let's get rid of that. I don't know what to put here. What would it be? Oh, okay. So I guess 0. Oh, easy enough. Okay. So now, knowing this, I'm still going to be aiming for the 14 pips. My TP. All right, looking at things, our GBP pairs are okay. Most of them are bearish. Well, they're all bearish, but you know, 2 of them are red. And then our CHF pairs, those were already red. So I think a lot of this move is coming from CHF. Look at that. See, and the other thing is, if I saw something that made me want to get out, I could actually get out at an actual 1-to-1. So risk to reward is not set in stone. It's dynamic. Just like sometimes you end up taking profit at a different area, right? Just because you may set up a trade for 1-to-1 or 1-to-2 or 1-to-5 doesn't always mean you end up taking profit at that point. And so so it's dynamic. All right, and a lot of people, I see them kind of setting up rules that are really stopping themselves from succeeding. And if you would just move with the market, if you'll move with the market, then you wouldn't have to worry about that. And see, here in 2.5 minutes, I'll be able to completely reduce the risk on this trade. I'll be bringing it down to break even, and that's not because I'm in profit. I'm doing that because of actual price action. So, you know, if you say you're a price action trader, you really got to be a price action trader. All right. So you have to use the price action. Let's see. What was that other trade that I'd taken? Was GBP CAD. Where is it at? There. Okay, and so you see what I'm at for the day, right? 0.16. Now, look at that tiny loss that I had in comparison to where my TP was. So that was probably a, well, I guess we could find out. Oops. That was probably a, it's upside down. So if I had calculated my original like this, that was probably, yeah, about a, that wasn't half. I don't know what it was now, but I calculated a 0.5 and a 0.5%, and I'm minus 1.6. So you do the math and you can figure out exactly what that ended up as. Wow. Where's GBPCHF? We've hit the TP, and I will close right here. Okay. Now we're up 0.34. So I know you guys are on the internet, and I know you see, this and that, and you see people, oh, only posting winners and only doing this and only doing that. And while some people may only show their winners, and I know and everybody knows that you're going to have losses when you're trading Forex. It's not when, you're going to have losses, right? It's not if, you're going to have losses, but how you manage your losses. If you go watch my video from yesterday, I was kind of pissed off at myself because I took my first trade of the day and I won that trade. I was up, I think, 0.5%. And that was perfect, right? But I decided to continue trading. It was beginning of the week. I was like, yeah, I got to get my trading in this week because next week we have the holidays and all of this. So I went ahead and took some more trades. I lost 2 trades after that. All right. And I was still up for the day. It's how you lose. And so I know this sounds crazy to a lot of you, but you've got to become a professional loser. Okay. If you're constantly focused on profit, which about 99% of traders are. They're focused on profit and they think they're managing their trades because they calculate their lot size and they set goals and they do this and they do that. You're not really managing your trades if you're not doing anything like what I just showed you here, where you're looking for a low risk opportunity. See that one trade I took on GBP CAD, this trade that I'd taken here, this was fantastic. The trade was great. Everything was good about it. I could have even reduced my risk down lower to where I only lost this much, but I didn't. So it's up to you to manage your risk and to give yourself as much room as you think you need, or how tight you want to be with your loss. But you've got to get it in your mind that you're going to lose, but when you lose, you need to lose small. And this is a very, very good example right here, because let me get my thing back on here. So this was GBP CAD, GBP CHF. Because see, what would have just happened here is this is where I took the trade. This was my TP at 15 pips. My stop loss was up here. Okay, so instead of taking this small loss, instead of taking this small loss right here, I could have taken the full size loss, right? And I see a lot of people just letting price come all the way back to that stop loss like that. In no way are they managing their loss, even though the opportunity was there over and over again. So for me, because of how the market was moving, I was trying to give it a little bit more room. I could have been really tight on it, right? And I could have put it all the way down to here. That would have had me lose, probably 3 pips or so, 4 pips. It would have been even a smaller loss. But I gave this one a little bit more room. I did open myself up to a little bit larger loss. If I would have been tighter with it, then I'd be up more today. But we don't always know where the market's going to go. Only thing that we can control in our trading is how much we lose. And so if you guys will take one key thing from all of this is that you've got to keep everyone says this all the time, you have to keep your losses small, and you open yourself up to maximizing on your winners. All right. And I show you this day in and day out. So you can see here where I lost my first trade. It was looking really good. I was down in profit. Everything was cool. It turned around, stopped me out, but it stopped me out at a small loss instead of a full loss. Okay. And for the other trade, what was it? GBP CHF. Great trading opportunity. Stop loss was here. Minimized my loss immediately by about 50%. and then price just moved right on down. Now, if price didn't continue moving down as quick as it would have, I would have moved my stops down to here, which then at that point I would have actually been break even on the trade, and that's because of price action, not because of, because I'm happy with the profit or this or that. So that's actually it for me today. I'm in the green. I ended the day profitable yesterday. I ended the day profitable today. That's the goal. Do the same thing tomorrow, and I will see you guys on the next video.